All right, let's get right into it. You're crushing it, right? Your gross commission income, your GCI, is looking great. But let's be honest, you feel kind of trapped. Like you're in a golden cage where every single dollar you make depends on your direct manual effort. Well, today, we're going to break you out of that cage. We're going to install the one system that turns a high GCI hustle into a real, durable business: basic financial reporting. I want you to really let that sink in for a second. That big number in your bank account feels great, doesn't it? But it tells you absolutely nothing about where you're headed. It only shows you where you've been. It's like flooring it on the highway while staring into the rearview mirror. You're just begging for a crash. You know, there's a name for this kind of rearview mirror management. We call it vibe-based accounting. It's when you run your company based on how you feel things are going. The problem is your feelings can't spot a margin bleed or an expense account that's getting way out of hand. And that, my friends, is a one-way ticket to burnout. And this whole practice, it ends up imposing this invisible tax on your company. We call it a fragility tax. It's the price you pay every single day for not knowing your numbers. It means your personal hustle has to constantly outrun all this hidden waste, which just kills the true value of your business and makes the whole thing incredibly fragile. So, how do we fix this mess? Well, the prescription is a complete shift in how you think. We've got to get you away from a business model that runs on your manual labor and move you to one that runs on systemic leverage. I mean, just look at the difference here. On one side, you've got the leader, that's you, constantly logging into accounts, guessing at profits, and basically being the only person who knows what's going on. That's a huge single point of failure. On the other side, you have a system, a real standard operating procedure, an SOP, that works on its own and gives you clean, predictable data every single month. And listen, this isn't just about a new report or a new spreadsheet. This is a deep, profound identity shift for you as a leader. You have to stop being the company's bookkeeper, the one chasing down receipts, and you have to become the firm's investor, the one who uses data to make smart decisions about where to put capital. You're not the chief problem solver anymore. You're the chief decision architect. Now, here's where the magic really happens. This is how it changes your team's entire mindset. See, when you create financial visibility, accountability just happens. All of a sudden, that casual $1,000 expense isn't just coming out of the boss's pocket. No way. It becomes a strategic use of the firm's resources. And trust me, everyone starts treating it that way. All right, let's get practical. Let's move into the step-by-step procedure. We're going to make this super tangible and, more importantly, totally achievable. This is exactly how you operationalize your financial rhythm. It's only 3 steps. That's it. First, you delegate. You assign a specific financial owner on your team, and let me be clear, this person is not you. Second, you lock in the cadence. You set a delivery date that is absolutely non-negotiable. And third, you do the investor review. Your only job is to analyze the data and make decisions. You do not prepare it. This right here, this is the number that changes everything. The 5th. Not the 6th, not sometime next week when we get around to it. On the 5th of every single month, that profit and loss statement, your P&L, it lands on your desk. This non-negotiable rhythm is what turns a good idea into a system that lasts. It creates discipline. It forces predictability. So when you get that report, what are you even looking at? Well, there are 4 key performance indicators, or KPIs, that are non-negotiable. Total GCI, that's your top line. Your net margin percentage, that's what you actually get to keep. Cost per lead tells you if your marketing is working. And revenue per head, that shows you the return you're getting on your people. So what's the end game here? What's the real long-term benefit of putting in this one simple system? The prognosis is a complete and total transformation of your business. By putting this one SOP into practice, you completely remove the vibe-based accounting constraint. You've just institutionalized financial visibility. You're protecting your net margin from emotional decisions, and you're making sure your company operates predictably, month in and month out. Okay, time for some tough love. Ask yourself this absence test. If you completely disappeared for a month, no phone, no email, would that accurate P&L still get generated on the 5th? Or would the entire financial reporting of your company grind to a complete halt without you? And now for the autonomy check. Have you actually given your team the authority and the clear service level agreement, the SLA, to get these numbers ready on their own? Or are you, if you're being honest, still the bottleneck because you haven't organized the data and truly delegated the outcome? And finally, the asset validation. Be brutally honest with yourself. Are you building a transparent, predictable platform that someone would actually pay good money for? A real asset? Or are you just running a high-income hustle that only works because of you, all hidden behind a lucky bank balance? The path forward is crystal clear. Build the SOP. Demand the data from your team and protect the margin like your life depends on it, because the life of your business does. That is how you build an asset that lasts.